Hey, good morning. It's Mike Shunke, Berkshire Hathaway Homes and Shift One Properties in Scottsdale, Arizona, on our way to Paradise Valley. Friday morning market chat with Mike, me. We're going to talk about residential, we're going to talk about commercial, and we're going to talk about the economy of it. It's pretty exciting. Residential inventory, we are down a little bit this week. You know, we've had a lot of up weeks and getting back to normal. Scottsdale, we've got about 1,700, I think 1,690, say 3. Single-family detached homes, remember, we separate that because that's a more solid base, more solid picture rather than the condos that they're building and townhouses and things. But we dropped 35 this week from last week on the market, and I think we're going to start seeing that as we head into these summer months. And we've been talking about, we've got sellers that have been sitting on the market, overpriced, not listening to their agents. And you really have to price things right. You know, we're working on a deal now in Phoenix, and you've got to be spot on. It's, I say selling a house is like a marathon. You price your property, you throw it out everywhere. It's like fishing, too. That's two different topics, I guess. But you cast the widest net, but it's like a marathon. If you don't come out of the gate spot on, right, ready to go, you let everybody else, you let 20, 30, 50 people go out of the gate and beat you to the market. So, and they're going to pass you. You know, buyers are pretty intelligent. Buyers are hesitant these days. They hear the doom and the gloom in the media. And, you know, they talk about this increase in inventory. Well, we've had 2 years, at least 2 years of no inventory. So we're kind of back to a normal market. We're still shy of where we need to be. About 3.5 months supply in general in the Phoenix metro area. And that needs to be about 6 months of supply to be a normal market. So I think heading into summer, these homes that the sellers that knew better than their agents and they follow the Zillow and stuff, they they're going to start coming off the market. The demand is still there, though. We've still got buyers, especially with kids in school. School season's ending now. People are here these next few weeks. If they want to move, now is the time. So buyers are here. I don't think taking your house off the market right now is a smart thing to do, but people do it. So, and I think, like I say, you really just got to price it right. We had existing home sales this week. Remember, these are national numbers. And, and every market is different. Every neighborhood to neighborhood is different. Existing home sales was down 1.8%. And the news loves to point that out. Remember, those went under contract. That was people shopping February, March. Existing home sales, that's measured when it closes. New home sales is measured when it goes under contract. And that brings me to, we are seeing a lot of buyers get cold feet and drop out of the contract. And that's why you need an experienced professional to really vet the buyer, vet your offers. Our job is to pull the offers all out, pick the right one, the one that's going to get you to the closing table. And that just comes from experience and knowledge. And, we've got Google. Google somebody, know who you're working with. So, average days on market's about 60 days. So, don't get excited if your property's not selling in the first week. Although, if it's priced right, it shouldn't be a problem. There's buyers here. But, yeah, inventory, we're back to pre-pandemic levels. And that's good. That's what we need. That's what we need to see. Actually, we still need a little bit more. So, at all price ranges. So, it's a reoccurring theme with the doom and gloom media, and just, ask somebody you trust, ask a professional, get to know who you're working with. And, that's interesting, but it is a weird market. People are afraid to negotiate. My wife makes fun of me and kids make fun of me. We'll go to the store, and I ask for a deal on everything. And that car's been sitting there for sale on someone's front yard forever. And, you got to just put it out there. Let's have a conversation. If I'm on the sell side, make me an offer. Who knows? You never know what the seller's thinking. You never know what the buyer's thinking. Pick up the phone. Let's have a conversation. Stop hiding behind texting and emailing. Let's have a conversation like adults and just get it done. Where do we need to be? The value of every asset is what a ready, willing, and able buyer is going to pay and what the seller is willing to sell it for. So, let's have a conversation. Anyway, commercial. There was an ICSC conference this week up in Vegas, and the overall international shopping centers, Council on Shopping Centers, and the overall feel was that, things are picking up. There's a consolidation in the commercial finance world. Lending was kind of tight for a while. It's still tight and getting tighter. But big groups are kind of consolidating. They're starting to pick up these mom and shop retail, mom and shop shopping malls, or mom and pop shopping malls, mom and pop retail. The baby boomers that held these investments individually, now these corporate and these big hedge funds and big groups are all picking them up. And that stuff's all handled. I don't do a whole lot of the big, the $50, $100 million deals. I don't do those. Those are teams that work on those. But my clients, the small business owner, they can see those trends and follow it. And that goes back to, that's why we always say own your real estate. As these big conglomerates pick up these small shopping centers, we'll use, or small multifamily, as they pick them up, vacancies are pretty low in commercial real estate, so they've got the leverage to raise the rents. If your business is based on what you're paying for rent right now, and they raise the rent, that's going to cut into your profits. So you want to own that real estate 100%. So there's money available for the small business owner. So if the numbers make sense, and that's where the commercial is. And we're seeing it. JW Marriott just sold for $865 million. I want to say billion, but that would be too much money. $865 million JW Marriott just sold for. And everyone thinks Arizona has all this land to build, and unless most of it is state-owned and federal-owned. Unless you're buying thousands of acres and you have the pockets deep enough to bring in the infrastructure and do the entitlements and make a whole new development, you're not going to get that property. Tempe actually has not a single infill lot. You need to buy a place, you need to buy a building on the commercial side, knock it down, and put something new and up to date on if you want. And actually, Tempe approved last night a 29th-floor tower down at the end of Mill Avenue. So, that got me thinking, this whole area, this whole Phoenix metro area is going to look a lot different in the next 5 to 10 years. When there's no land available, where do you go? You go up. So they're approving these, and we're going to miss the view out of these beautiful mountains. I always say, you know which direction you're going in the Scottsdale, Phoenix area, because you get to learn the mountains, Camelback, Piestewa Peak. You kind of know where you are just by the mountains. But in the next 5 to 10 years, we've got to go up just because the population's increasing. So if you find those little deals that you can pick those up, you can do pretty well. And, it's interesting on the residential side. I'm getting a lot of calls. And I would say work with like-minded people. I'm getting a lot more calls. Cave Creek, Carefree area. Carefree is hot. Fountain Hills. People, my clients at least, the people who call me, they want to move out away from that, and they just want that sprawl on the outer edge. That's kind of why we went on that Cave Creek tour last week. One of those properties just had a price drop too. So that's, if you saw something on that video that you like, call me, because there's been some price adjustments on there, and I think it's a great deal actually. Let me know. So another one, 6 acres, north Carefree, Cave Creek. That's commercial. It's coming. That's I can't find a buyer for. A friend of mine is bringing it to market, and I would love to represent a buyer on that to build storage units, a small shopping center. You're going to get some pushback from the community, but again, that's where it comes with experience and communication. Just, it's a give and take, but I think that's a big moneymaker for somebody. It's, let me know if you develop things like that, small shopping center development, and let's do it. I think you're going to make money on it. The economy, super fun, right? It's up and down and up and down. You know who's loving it? The traders are making a killing on this volatility. And, I throughout the week, I make little notes, and I just think, just make notes of what I'm going to talk about. And then Friday comes, and something tariff comes. I don't know if my friend Donald Trump gets bored or what, but he threw out a 50% tariff on European Union today, and the market all went crazy. And but I used to work for a trader, John Kuhn. He was awesome. He was just the most. I think I learned a lot of business tactics from him. He was cool, calm, and collected, and he was the best at just letting the market overreact and capitalizing on that. And that's what you got to do. Bonds were higher this week. Rates in general, bonds across the board. But what the media focused on was the 30-year bond, up 5% again, back to 2000. I'm going to say 2000 numbers, but the 30-year bond jumped up. Well, I heard a good, interesting topic yesterday. The 10-year Treasury is the most solid investment in the world. That's the baseline. That's what everybody follows. That's everything is based off the 10-year Treasury. Well, the media this week was coming out and saying rates are high, talking about the 30-year bond. Do you know that they didn't even issue 30-year bonds between 2001 and 2005? Nobody really cares. And, the Moody's downgrade, the bond traders don't care. They care about uncertainty and risk. And the bond market right now is telling us you need to pay us more than 4.5% for our money for us to invest in the U.S. right now. So there's some uncertainty out there, but, this big, beautiful deal, big, beautiful bill, whatever they're calling it, gets people excited. And, my point to that is a plan. We haven't had a plan for the last administration. It's just been spend. At least with this bill, whether you like it or not, there's a plan set in place. Hasn't passed yet. It goes to the Senate, however that works. But, at least there's a plan in place, and we know we can have a little bit more certainty. And that's all what investments are about. They talk about people's 401ks. Dow, S&P, NASDAQ, all up higher than a year ago. You won't hear that on the media, but it is. Go look at the charts. They're all up higher than a year. So, just, again, all that is noise. It's exciting. It's fun to listen to. It's fun to watch. For me, at least, I enjoy it. But pay attention to your numbers. Pay attention to what works for you. And, that's, again, go back. That's what we do. We take the emotion out of your deal, out of your real estate deal. We'll give you the facts. We'll let you know where the numbers are. And, prices are pretty firm right now. The market's good. It's a good, normal market. We've had such chaos, I guess, craziness over the past 3 years, that, it's kind of nice to see. We're in a normal market right now. So it's balanced, slight buyers in some parts, slight sellers in some parts. Things are good. No reason to get excited. So, anyway, run to Paradise Valley. We'll get into the fancy houses you guys all like to see, and we'll post some of those later. But again, my job is to take the emotion out of your deal. If I can help you buy or sell residential, commercial, land, investments, if you just have questions, if you need help working through a deal. We do need to get a little bit creative these days and figure things out, and that's where my experience in the commercial market comes to the residential. It's what I say, it's like playing basketball with toddlers. But I shouldn't say that. There's some great agents out there, and actually we're going to talk to a few of them right now. So have a great day. Be smart, be safe. Thanks for watching. I appreciate it, and we'll talk to you later. Give me a call anytime. 203-733-5877.